The first pro or positive of trading through a limited company is that business separation. So much of running a business and your success depends upon mindset. And I know that sounds a little bit woo and something that maybe a coach or someone would say to you, but it really does. You find quite often with freelancers, there can be a trend where we sort of put our business down and refer to it as just, a bit of a side business or a hobby. And having a limited company means that you need to separate it. So your business does have its own bank account. It does have to file its own accounts, and it can just make it feel maybe that little bit more important and a little bit more, separate to yourself. And that, for some people, can really help with their mindset, with their business. So I put that down as the first thing, because we can often overlook that, but it can be sort of quite powerful in terms of the success of our business. The second thing is, because it's separate to you, you can control what you earn from it. So unlike being self-employed, profit from the limited company is not added to any employment income that you might have. So if you are running your business as a bit of a side hustle, or it's going to be too small for the first couple of years to be able to be your sole income, if your employment income is, sort of 40, 45, pretty close to the higher rate threshold, you may not want to pay tax on all of the profit that your business makes, because there's probably nothing worse than making, say, £10,000 profit only to be immediately in the 40 rate tax band and have to hand that over to HMRC. So with that separation, it means that obviously the profits will be subject to corporation tax, but that's lower than the personal tax and national insurance bands. And you can then control what you personally earn. So you can possibly engineer it so that you don't go over sort of the higher rate band or, the higher earner sort of threshold. The final thing, it gives your business time to grow. I went through it in episode 2 when I said about the 3 things to consider when it becomes tax efficient to be a limited company. And sometimes if you believe that your business is going to grow quickly, or maybe, there is always a chance of a jump of income, if you're self-employed, you're always going to be keeping an eye on when is it tax efficient. And when do you need to make that jump? And, going through the process of moving your business from one to another. If you're a limited company, it's done for you. You're already sort of future-proofed. You're already sort of tax efficient, providing obviously your profits go over the figures I talk about in episode 2. So that's kind of the main things. It's not, I make it sound like there's not actually that many positives around being a limited company, but I said it's a little bit more future-proof if you're expecting to grow. It's very positive sometimes from a mindset point of view, and it gives you that control over your personal income as well. So I hope that helps. In the next episode, I'm going to be talking about what if you set up a limited company and actually you don't use it. So we're going to be going through sort of dormant limited companies and moving on to sort of the questions you might ask as you begin to start trading. So I hope that helps, and I will see you next week.